Welcome everyone to HFN. Today is November 27, 2019. Here to give you all the news according to the charts and the place to where we trade different. We don't utilize any of those indicators on our price charts. We simply look at price bars and the volume to determine what's the likely outcome of future price movement. If you guys appreciate our videos, hit that subscribe button, like and share the video. Join us on Twitter, Facebook, our website, HueFinancial.com. All those locations is where we'll be at, giving you all the news according to the chart. So now we are going to talk about why Aurora Cannabis is not a buy right now, and it is based off this article. But for us, we need to certify that what this article is actually trying to state is actually being revealed on the price chart. That's how you can tell whether or not the market or this article is in tune with what the market is actually doing. So we are going to look at this article first, and then we're going to update you all on our price forecast from our last time we did our video in Aurora Cannabis, and then we'll give you our expected forecast movement in Aurora Cannabis going into the future. So now let's talk. Aurora Cannabis could be in financial distress. This article is going to go into what could be the causes as to why Aurora Cannabis can be in financial distress, and one of the main reasons is because of the oversupply of cannabis that is in the market right now. The article starts off with Aurora Cannabis first quarter fiscal 2020 results continue to show that this quarter the Canadian cannabis companies really missed their revenue and their earning targets, the earning season. The unsold product, meaning the cannabis that has been written down on the books of the producers, with nearly every large Canadian LP writing down a significant amount of inventory that occurred in that first quarter. The overarching problem for the Canadian cannabis company is clearly too much product in the market. And with the oversupply, and the oversupply is massive and it's still growing as the charts below from Health Canada is showing. They are somewhat outdated, and clearly the situation has gotten worse. You guys can see the increase of the oversupply into the market in the cannabis company. I will leave a link of this article in the description of the video for Aurora Cannabis if you guys want to really look at that particular graph. So now going forward, after we enter a period of intense oversupply, the survivors will be the companies that can either reach self-sufficiency and have the cash resources to fund the continued losses that they will incur. While the cannabis oversupply is clearly the main story, it was really only a matter of time before overinvestment resulted in oversupply. Perhaps one of the most shocking news of the quarter is that Aurora Cannabis, which is neck and neck with Canopy Growth as the largest cannabis company in the world, is evidently now in financial distress. This section here, this paragraph right here, simply goes into the bond issuance, how Aurora Cannabis is trying to stay viable, free up some cash with their investors in the market. Okay. Now, Aurora announced in conjunction with this earnings release that it had agreed with the holders of their debt of 155 million Canadian dollars of its convertible bonds that is due in March 2020 to adjust the conversion price down to a lower price, which will be about 6% below a volume weighted average price over this current week, in order to issue more shares in satisfaction of the bonds. So they're trying to lower the interest rate of those convertible bonds so that they can issue more shares out into the market to investors. This is plainly a way of distributing stock by offering bondholders something they are not otherwise entitled to, and incentivizing them to participate by offering them a nice discount of 6%, just to ensure that the bondholders are able to immediately sell the shares they are issued at a profit, or at least with a minimum loss and also structuring offering using the swap mechanism. Now this can cause the stock price to spiral down during the period as the bondholders sell the stock that they intend to buy with the issuance of those convertible bonds. Thereby, it's going to cause the stock price of Aurora Cannabis to drop more as more shares are being issued. What has been talked about in this previous paragraph is the best option, according to this article, available to Aurora. There were other options, like they could have refinanced the convertible loans with new debt or more debt, but presumably this was not practical because new debt will prohibitively be more expensive. Second thing they could have done, they could have issued more stock. This is considered risky as it could fail or might require a greater than 6% discount that they just did of the convertible bonds of those 155 million Canadian dollars. Or the last one they could have done, it could have did a cash raising opportunity such as selling some assets, partnering with some other companies, corporations. These were not available because funding for Canadian cannabis companies has completely dried up. Now, this is the caveat. This is the loophole in this article from Seeking Alpha. Right here, this sentence. Now, I don't have any direct evidence that these are true. So everything above this sentence is not backed by any evidence. But the fact that Aurora struck this deal with bondholders indicates that they are likely true. So take everything that was written above that sentence with a grain of salt. They also, talking about Aurora Cannabis, has announced other emergency measures. The first thing that they did, that they suspended construction on their Nordic 2 and their Aurora Sun facilities, which saved the company about $190 million Canadian dollars in a planned capex. The second thing that they did, that they sold 29 million shares for $125 million under its $400 million ATM program. Even with both of these emergency measures, Aurora is still surprisingly in a weak financial condition. Its working capital balance as of September 30, 2019 was $123.8 Canadian million, of which 45 million is restricted. It's on lockdown that must be held as cash collateral per and credit agreement. So that only leaves 78.8 Canadian million dollars of breathing room that Aurora Cannabis can rely on to fund its operation. And then this goes into a little bit more into their revenues, their accounting, which we are not going to delve into. But as a result, it is clear that Aurora is going to continue to sell more shares aggressively through its ATM program, under which $275 million remains, and the capacity can easily be increased. The big picture, these developments indicate that Aurora, notwithstanding its leadership position in line with cannabis growth, is nearly out of money and will need to issue stock onto the market in the immediate future to fund ongoing losses. Its weak financial position could be a significant competitive disadvantage going forward compared to the well-funded competitors like Cannabis Growth and Kronos. No wonder. Could it be the reason why Aurora Cannabis has not landed a deal or partner with another company? Very much could be the reason. But for us, we need to look at the price chart for Aurora Cannabis, and let's do that right now. Okay, daily time frame in the market for Aurora Cannabis. You can see that we were anticipating the market in Aurora Cannabis to continue to move lower in price, and has definitely surpassed our ultimate support area into the market. 16.8% profit could have been had from our video that was conducted on November the 11th. Or if you're still into the market in Aurora Cannabis today, about 32% in the market for you. So there you are right there. Let's get rid of it. And now we need to talk about the future prospects in the market for Aurora Cannabis. And I want to start out looking at the monthly price chart in Aurora Cannabis. You all can see right here that Aurora Cannabis has clearly fell off a cliff in terms of price, and the weakness is still being generated. Okay, I'm finding that $2 to be a support area all the way back down to about $1.70. That is severely cheap in terms of where we were just a couple of months in the beginning half of 2019. So let's just see how much we said, about $1.68. That is still 35%, 36% from where we are today, movement to the downside. Okay, I do not like what's being revealed on the monthly price chart in Aurora Cannabis. It is severely weak. And going back over to a weekly chart, you can still tell that the weakness into the market in Aurora Cannabis is still there. I'm still expecting the market in Aurora Cannabis to continue to move lower, preferably right there around that $2 location for support. But again, we can still hit about $1.70, 60 cents in the long term as well. So what we're going to do, we still anticipated the market in Aurora Cannabis to continue to see lower prices. So that's what we're going to do. We're going to follow the market and its directions of which it is telling us where it wants to go, which is continued movement to the downside back there towards that $2 area. Let's bring that up. It's still about 18.5% market move to the downside in Aurora Cannabis. So clearly, the market in Aurora Cannabis is definitely weak. It seemingly looks like we're trying to create a consolidational trading range into the market of market accumulation, which is going to be between $2 all the way up there to $3 in the market for Aurora Cannabis. But this market in Aurora Cannabis, according to the price chart, is not a buy until we see a break up above $2.80. Okay, and then even then we might just hit up there to $3 or even $3.50 in the near term. But right now, from the price chart perspective, looking at the article as well, Aurora Cannabis is not a buy. Questions, comments, as always, leave us one with a comment in the comment section of this video. Join us on all of our many social media platforms, Twitter, Facebook, our website. All those locations is where we'll be giving out our price forecasts for stocks, cryptocurrencies, commodities. Make sure you always maintain your profitability, and I will see you on the next one.